This is a smart guide to insurance in Korea Part 1. What foreign residents should know before signing up. A low premium is only half of the story. Insurance is not just a monthly payment. It is a long-term financial contract. Before you sign, you need to understand exactly what it covers, what it excludes, how much it costs over time, and what happens if you cancel. Second lesson. Insurance is an umbrella, not a bank deposit. Insurance is designed to protect you from financial risk. You pay premiums so that if a covered event happens, the insurer pays the benefit. Some products are long-term contracts with strict rules. If you stop paying or cancel early, you may lose part of the money you paid. Here are the specific steps you should follow. Step 1. Start with your real purpose. Do not start with the product. Start with your need. If you are worried about hospital bills, health coverage is your priority. If your family depends on your income, you need life insurance. If your main goal is short-term saving, an insurance contract. If likely, the wrong tools. Step 2. Build protection without paying twice. Many people buy new policies without checking what they already have. If you work for a company or are registered as a dependent, you may already have coverage. The goal is to build the right protection, not to pay twice for the exact same risk. Step 3. Learn the language of the contract. In Phase 1, there are 3 main keywords you should keep in mind. First is premium. It the money you pay. Second is coverage. It is what the policy protects. Third is exclusion. It is what the policy explicitly does not cover. Phase 2. Using the insurance. Deductible or co-payment is the portion of the bill you must pay yourself. Renewal is when the policy continues, often with a higher premium. Phase 3. Canceling the insurance. Cash value is value building up inside certain life policies. Surrender value is the actual money you receive if you cancel the insurance. It is often much lower than premiums paid. Step 4. The longevity test for your budget. There is a question that must pop up into your head when you are signing an insurance contract. Can you pay this premium every month for many years? A premium that feels affordable today may become difficult if your job changes, your rent increases, or you need to send more money home. Insurance should protect your life, not make your monthly budget harder. Step 5. Compare the whole contract, not just the price. Look at the comparison between these two products. Product A has cheaper premium, but Product B has broader coverage amount, fewer exclusions, easier claim process, and higher surrender value. Two products can have similar names but very different conditions. If you only ask how much it is, you will miss the hidden costs. Always ask, what exactly is covered? Can the premium increase later? And how difficult it is to file a claim. Step 6. Protect your claim by telling the total truth. When you apply for insurance, you have a legal duty to disclose your true health and lifestyle details. If you hide information or guess incorrectly, the insurer can deny your claim or cancel the contract right when you need it most. If you do not understand any question on the application, ask the insurance planner about it. Step 7. Demand clear answers before you apply. Do not sign just because they say, don't worry. Question about the terms, verify the answers in the documents. Only proceed when you understand. There are some sample questions you can ask. What exactly is excluded? Under what conditions can premiums increase? What happens to this policy if I leave Korea? Next, there are 2 red flags you should be aware of. The first red flag is misunderstanding whole life insurance as savings. Whole life insurance's primary goal is death benefit and long-term family protection. Liquidity is low in early years, and early cancellation can lead to high financial loss. On the other hand, bank deposit's primary goal is saving money for yourself. It has high liquidity, early cancellation is available. Be highly cautious if a planner says, you can use this like a bank account, or focus on the cash value. Whole life insurance provides a death benefit. The surrender value is often lower than the premiums you paid if you cancel early. Second red flag. The upgrade trap. Watch out for planners who say cancel your old policy, this new one is better. A new policy is not automatically an upgrade. Canceling an old policy means you might lose valuable coverage and start new waiting periods. Always demand a written comparison between the old and new policy before making a switch. I will sum up with the pre-signing checklist. 1. Determine your true purpose. 2. Check your existing coverage. 3. Pass the long-term budget test. 4. Compare exclusions and claim processes, not just the price. 5. Provide completely truthful answers regarding health and habits. 6. Demand clear explanations before signing. 7. Keep all documents, messages, and recordings. You will now have the tools to navigate the Korean insurance system wisely. Protect yourself, protect your future, and never buy what you do not fully understand.